Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Innovative Industrial Properties Inc. quarterly report. Innovative Industrial Properties, Inc. offers a range of businesses and services through its Real Estate Investment Trust, REIT. The company specializes in acquiring, owning, and managing industrial properties that are leased to licensed operators for use as regulated cannabis facilities. This includes acquisition and ownership of specialized industrial properties, property management services for these facilities, leasing properties to experienced, state-licensed cannabis operators. The stock price crash of Innovative Industrial Properties Inc., a year of setbacks. Innovative Industrial Properties Inc., IIPR, has experienced a significant decline in its stock price over the past year, plummeting by 51.03%. This downturn can be attributed to a series of negative events that have plagued the company and the cannabis industry as a whole. Tenant defaults have been a major contributor to IIPR's financial woes. The largest tenant, PharmaCann, defaulted on its leases in December 2024, followed by other notable tenants such as Forefront Ventures, Gold Flora, and Tilt Holdings. These defaults have resulted in substantial losses for the company, with nearly 20% of annual base rent remaining unpaid. The cannabis industry has also faced significant challenges, including regulatory uncertainties, inconsistent state-level regulations, and a lack of federal legislative reform. The oversupply in some state markets has led to plummeting wholesale prices, squeezing profit margins, and impacting tenants' ability to meet rent obligations. IIPR's financial performance has suffered as a result, with revenue declining by 1% in 2024 compared to the previous year. Cone 2025 earnings reported a miss on both earnings per share, EPS, and revenue forecasts, further exacerbating the company's struggles. The cumulative effect of these negative events has led to IIPR's stock price crash, from a 52-week high of $134.31 in November 2024 to a 52-week low of $45.44 by April 2025. As of early November 2025, the stock continued to trade around the $50 mark, reflecting the ongoing challenges faced by the company and the cannabis industry. The primary drivers of revenue growth or decline for a company are multifaceted. On the growth side, lease revenue from triple-net lease agreements and acquisition of specialized industrial properties in the life science industry contribute significantly to revenue increases. Sale-leaseback transactions, rental revenue growth, interest income on investments, and tenant reimbursable revenue also play important roles. However, there are several drivers that lead to revenue decline. Lease amendments with PharmaCann resulted in a significant reduction in rental revenues, while abatement of monthly base rent for two properties further decreased revenue. Tenant defaults and termination of leases for cultivation properties also contributed to the decline. External factors such as changes in regulatory conditions, reduced capital availability, inflation, tariffs, and supply chain disruptions can impact revenue growth or decline. These factors can limit access to financing, increase costs, and disrupt supply chains, ultimately affecting a company's revenue. Net income and profit margins have experienced a decline over the past year. For the 9 months ended September 30, 2025, net income decreased by $35.2 million compared to the same period in 2024. This trend is also observed for the 3 months ended September 30, 2025, with a decrease of $11 million. Profit margins have also seen a significant decline, from 52.7% to 45.4% over the past quarter, and from 54.6% to 43.2% over the 9-month period. The main reasons for these changes include reduced rental revenues in certain states, compressed operating margins due to declining unit pricing, increased costs from tariffs and supply chain disruptions, reduced capital availability, and ongoing regulatory uncertainty. These factors have collectively contributed to a decline in net income and profit margins, indicating challenges faced by the company in navigating the cannabis industry. The company's financial performance indicates a strong ability to generate cash from its core operations. With positive operating cash flows of $148,282 in 2025 and $200,640 in 2024, the company demonstrates its capacity to manage costs effectively and maintain profitability. This trend suggests that the business is financially stable and well-positioned for future growth. Management's outlook and strategy. the company is shifting its focus towards diversifying investments in real estate-related assets, with a particular emphasis on life science properties and regulated cannabis cultivation and processing facilities. To achieve this, management plans to refresh the tenant base with more financially viable tenants, expand investment activities through joint ventures and debt financing, and actively pursue acquisitions within the life science industry. To manage risk and meet liquidity needs, the company will rely on rental income, cash flows, borrowings, and access to capital markets. Management is also seeking an investment-grade rating to reduce costs of capital and refinance existing debt during periods of elevated interest rates. Overall, the strategy aims to drive long-term growth while mitigating potential losses through diversification and risk management. The company has made significant acquisitions and divestitures to expand its portfolio and revenue streams. Key acquisitions include real estate properties and life science investments, IQHQ preferred stock, with a total value of up to $170 million, a construction loan for a cannabis cultivation facility in California properties within the life science industry. As part of its growth strategy, the company has also made several divestitures, including the sale of one property in Palm Springs, California, resulting in an impairment loss of $3.5 million. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has a history of paying dividends to its shareholders, as evident from references on multiple pages. Secondly, the company has also bought back shares, further demonstrating its commitment to returning value to its investors. Concerns about inventory buildup and supply chain disruption in the cannabis industry. The cannabis industry is facing significant concerns regarding inventory buildup and supply chain disruption. Tariffs on imports from key trading partners may increase costs of essential inputs, hindering cultivation and production. Escalating geopolitical tensions have disrupted global supply chains, leading to sourcing challenges, longer lead times, and increased costs for capital projects. These disruptions pose a substantial risk to the industry's growth and stability. The potential for industry consolidation could further exacerbate these issues by reducing tenant demand or rentable square footage required by prospective tenants. As a result, it is essential for stakeholders to address these concerns proactively to mitigate their impact on the cannabis industry. That concludes the financial summary for Innovative Industrial Properties Inc. Feel free to comment below, and I will be happy to answer them when possible.